Can you buy a second home before selling your current home? You absolutely can. It's a lot easier than you might think. And you should take a look at it to give yourself some leverage when buying a new home. Let's go talk about it. So I get this question all the time. I don't want to sell my home until I've found the home that I want to buy. But I also don't want to... Hey, I'm Susan Thetford with Parks Properties. I'm a 36-year career realtor, retired general contractor, and my passion is to simplify complicated real estate matters into terminology that's simple to understand and easy to follow. If you like this kind of information, please, I encourage you, like this channel, subscribe, and tap that bell so you don't miss a thing. I do a new video every single week with very timely topics. So let's talk about a situation that happens often in my business. Someone owns a home, too small. They want to upsize, they want to grow. The home they live in currently has about maybe $100,000, $200,000 equity. There's good equity. But that equity is needed to buy the second home at a lower interest rate, at a lower mortgage payment. But it's the chicken or egg situation, right? Who wants to sell their home and potentially have to then go lease for 6 months to a year while they're looking for the next home and lose all the tax deductions of home ownership? And interest rates today are so good. Who knows how long they're going to stay this great? Who wants to wait until those interest rates fly up and their home finally sells? Until now, there have been three real options: to refinance, purchase a home, and then refinance once the other home is sold, or to get a bridge loan called an 80/20 or a recast. Let's talk about each one of these situations with a real life scenario. The first option would be a refinance. Buy the new home if their ratios can handle it. Buy that new home. When the other home sells, then put that $100,000 of equity into doing a refinance. You will incur more fees. You will possibly lose a great interest rate, but that is an option. The second option would be what we call the 80/20. You get a primary loan at 80%, and then a second loan of 20% or maybe 15%, depending on how much down payment money they have. Get a second loan. That's going to require a higher interest rate on that first because there's very little equity in this property, and private mortgage insurance. So the monthly rate will be higher, the monthly payments will be higher, both because of that interest rate and because of that private mortgage insurance that is insisted upon. When the home they currently live in sells, that $100,000 could reduce the principal amount and hold on to that 80% loan, primary loan, but the interest rate is higher over a 30-year period. It could be much more expensive than it needs to be. So the third option is what's called a recast. Same house, current home has $100,000 of equity. The buyer buys that next house for $500,000. They get a 5%, 10% loan maybe from parents, or maybe they have it from savings. They buy the home at $500,000 at the lower interest rates of today, and then move in, and then when the current home sells, they could put down another $100,000. The loan amount changes, the interest rate does not change. You've got the lower interest rate, and the time period, the term period doesn't change. So maybe in year 2, they have a windfall, they win the lottery, or they get a giant raise, or inheritance. Anybody can do this at any point with a lump sum of money if your lender will do a recast.
I can do that.
If the person who handles your mortgage will do a recast, you can go to them and say, look, I've got another $100,000. I want to reduce my principal. I want to keep my interest rate exactly where it is. Costs about $250, $300 most. You don't have the extra fees. You don't have an extra appraisal. You keep the same term. So maybe if it's in the second year, you only have 28 years left on that mortgage and have lower monthly payments. So that same $500,000 loan, interest rate, if you had a 95% loan, $2,600 would be your monthly payment, principal and interest, and PMI, because it's over an 80% loan. But once it's recast, that very same loan, same interest rate, you drop the PMI, you drop the private mortgage insurance, and you drop the loan amount, and the new monthly payment is right about $2,000. You're saving $600 by making that lump sum. Costs about $300 to do it, to do the recast, and it is the best way to not lose advantage of the interest rates, to not lose the house of your dreams, to not have to do an interim move between a sale and a purchase. And it's a win-win-win for everybody. Tell me in the comments, have you heard of a recast? Do you know if your lender will do a recast? It all depends on who the servicer of. Ask the questions. I have found a recast to be the answer to so many people's prayers, but very few people seem to know about it. I want you to check into it. And pass this along if you happen to know of someone who is thinking of buying a home or in the process, or maybe has lost several homes, because people today will not take a sale of home contingency in our hot market. Please subscribe to my channel, talk about all things real estate here in the Nashville, Tennessee area, and principles that are good throughout the country. I drop a new video every single week. I'd love you to put in the comments, is there something that you would like me to cover in the topics? Happy to do it for you. And while you're here, check out a couple other videos. The one about Zillow is really very eye-opening, I think. Or maybe this one, who pays the buyer's agent in a real estate transaction? I invite your comments, and I look forward to seeing you next week. Blah, 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 blah. How tongue-tied can someone get?